Cryptocurrency is well overdue for a bounce. Let's look at how long this bounce can last and what price ranges we are looking for in terms of targets for these markets. There are a lot of traps when it comes to market lows and trying to trade the bounce. So let's take a look at that in today's video. Smash up the likes if you haven't already. Subscribe to the channel. There are 70% of you subscribed, leaves 30% not subscribed. Make sure you do that with that bell notification icon turned on so you can stay up to date with the best cryptocurrency and real estate cycle updates here on YouTube. Thanks to the channel sponsor Bybit, we've also got the World Series of Trading going on at the moment. So join our team over on Bybit, Crypto Hobo. Search for that. Use the links in the top of the video description to get your thousands of dollars of sign-up bonuses plus extra bonuses if you join our trading team over there. Now, this is for experienced traders, so make sure you have your plans ready to go for when this commences. Links are all in the video description down below, but if you just want a new exchange over there to spread out your risk, check out Bybit. There is spot trading and interest features on that app. All right, let's kick it off with the Bitcoin chart that I have right here, and then look at some of the altcoins that I am tracking. Now, Bitcoin has been moving up for the last 3.5 days. This is our swing trading tool. So our TIA, the Investor Accelerator swing trading tool that I've got on the chart here. I'll also link to that in the video description. But essentially, we can turn on the trend of the market. So we go into our settings, we can show trend, turn it on, turn it off. I'll leave it on just for this example here, because what we want to find out is what is happening in the market, what can we do to better prepare ourselves for any of the market action coming next, and how can we stay in front of it? We're looking at the trend here. The trend is red, the trend is down, and what I've got here are time frames of how much the trend has bounced in the past, and we can see a really clear pattern when it comes to colors of the trend. Now, we're in a red trend. This is a downtrend at the moment. This is just a daily trend as well. And of course, we go into a weekly. That gives us a better idea, a nice, cleaner picture of the macro move. But just for argument's sake, we're going to look at the daily trend on this chart. And you can see the moves of the uptrend moves are 3 days, 5 days, 3 days. And this is starting from some black areas, which are uncertain. And then we go into the reds here and the greens. So in terms of the red, it does take a little bit of work to get back into the green, back into the uptrend. Now, if the market is trending up in the green, you get much longer moves, much more consistent moves, and the moves last longer, but they also have bigger ranges to the upside. So those things will work a lot nicer when it comes to the trading plans and what we can expect for the market action. Right now, we are still in a red zone, meaning the trend is down. And of course, we have to flip from red to green, or at least uncertain, and then into a green and uptrend in order to get some higher prices, to go long in the market. And for that to happen, it can take some time. Now, the trades themselves to get into that green may be a little more risky. So the first trap people do, it's very simple, probably heard it a million times before, is they don't use stop losses. So I won't bang on about that, because I also get sick of hearing about put a stop loss in, put a stop loss in. But where do you put a stop loss? People are trying to figure that out, and they usually get stopped out. You can see there's a fair bit of market action under this level. So if we take a line across here, it's just under the 20K. But it depends on how much leverage you're using on this particular trade. And people do hear about liquidations all the time. They don't understand what it is, or whether it means that their entire account is wiped out. That's not true. It depends on how much you are risking per trade. If you have a $1,000 account and you're risking $50 a trade, then that's all you'll get liquidated. 10,000, you're risking $500, that's all you'll get liquidated. All right, so just to understand that. In terms of some other stop losses that could be further away, well, then we can use the lows here, because there's going to be less risk on the market coming all the way back down than it is going just a little way down and then getting stopped out. So we've also got the zones beneath 17.5K. So that's what we're looking for with the market action next. Now, the really big important part is the timing of the trade. This is huge, the timing. People think it can't be done, but just take a look back at what we've seen in the market already. Now, the moves up, we'll forget about the pattern in the background at the moment, just to get an idea of what is happening with how long the moves are lasting to the upside. We've already been going up for 3 days now. So take it from the low to the top of the swing, 3 days. If this day goes above yesterday's high, then we'll be at 4 days. Let's have a look at what happened in the past. Well, we've got 3 days up, 5 days up, not including these because these are basically in a range. And if I don't include it, that's why. We've got about 3 days up to that peak before we went sideways. We got 3 days up. Now this is a different trend. We had a stopping volume and then we started to turn around and move again. So you can see from these multiple moves recently, 1, 2, 3, 4, that we've only gone up for about 3 to 5 days. Right now we are in our 3rd day. So if I was looking to make a trade, I would be then waiting for confirmation to see where this swing low comes in, whether it's higher than the previous low. That's going to give me some strength to what might come to the upside. And then I would wait for some confirmation for the market to break some of these tops. Meanwhile, keeping my stop nice and close so that I don't get wrecked in the market, waiting for it to come up and then come all the way back down, because we're still in a downtrend at the end of the day. So 3 to 5 days, we've gone up for 3. The likelihood of it continuing on is a lot less because we can see what the market has done in the past. The buyers and the sellers are starting to get worn out. Well, the buyers are starting to get worn out and the sellers are starting to overtake the market. And you can see the moves are a little smaller. Now, the sellers can lose and the buyers can take control here by just pushing that market up, coming in and giving us something extra by taking out some of these resistance levels above the market. But I want to take this a step further and just go back and have a look at how it works in the past when their trend is up, because eventually we're going to turn up and we've got to be aware of the traps. So this is kind of a sideways area with a slight bias to the upside. We can see there are some moves in here from the bottom to the top, even though there's some other swings, 17 days. But within this move, we have 8 days to that first peak before it corrected. But then just this first move is 2 bars, 1 day reversal. We probably had another couple of bars, 2 day reversal, another 2 days up, 2 days down. So there was a lot of chopping and changing around that 2 day mark to get us to 8 days up before the market then took off for about 6 days, 1, 2, 3, 4, 5, 6 into that peak of the 7th day for that final run. Next move here is 6 bars with a 1 day correction. So you got 1, 2, 3 up, correction, 1, 2, 3 up. He's starting to see the pattern here. We've got a few days in the market of the market moving. I can use this 1, 2 days up, and then we had the reversal. 1, 2, 3 days, 2 day reversal. 2 days kind of up, very weak. We then got a reversal. Then we went on to that final run, and this was very similar to what happened the 2 times before that. Sure, this was shorter, but you can see you're in a slightly different scenario of the market. People were still unsure if we were going to dump. A lot of people saying bearish, a lot of people still saying bullish. This was at that time of the Bitcoin conference in Miami, so people were still kind of bullish, but eventually that all wore out and we went on a massive move to the downside. So hopefully you can see the point here is about 3 days, 3 maybe to 5 or 6 days to the upside in a clear run before we get that correction. Now in a more bullish move, you can see we get a lot cleaner trends without the swings getting broken or only slightly broken. So that is a good sign for the bulls. You can see we went up for 2 days, a small little correction here, but it really didn't come down like we saw now. And then we go again for another 5, 6, 7 days. And then a tiny correction here of 1 day, couple of day correction after 4 days up, 1, 2, 3, 3.5 days up, and then the correction. Then we went into that final top. So the trap and the warning here is, yes, there probably will be a bounce. We've had pretty good volume. We've managed to close above the old all-time high. So a lot of things are lining up for a good bounce. And then we got to look over into some of the cryptos. Now, Bitcoin has gone up for 3 days. So we need to go and check what else is going on in the market as well. But before I do, how this happens, why this happens is because we still have things like the Wall Street cheat sheet. And a lot of people will use this and just spread it across the macro view of the market. That's exactly what I love to use it for as well. But we get these emotions happening on smaller term timeframes just as much as we do on the longer term timeframes. So within the trade itself, and this is where the timing goes wrong for a lot of new traders, even investors, they're trying to time to the T, which we don't need to. But within these trades, these 3 or 5 days up and then the corrections, you get the same emotions here. You know, the disbelief, the hope, the recovery, the depression at the lows, optimism, belief, thrill, euphoria. So you can see it's low and then all of a sudden everyone rushes in because they feel like it's ready to go. and you get that blow off into the euphoria. It's nowhere near the same size as obviously on a macro, but of course we're just looking at the short-term stuff here. And so then you get the depression back to the downside in the smaller ranges, and that's what you'll see on, if we bring it back to the hourly chart, you'll get the similar sort of moves there, you know, the accumulation, the depression, and then we start to move up into that final top. You can see the complacency, the lower swing top, and then anxiety, denial, panic, all the way back down. And it rinses and repeats on a much shorter time frame as well. Speaking of time frames, let's move to a macro and look at Ethereum as an example here in terms of a bounce. Now, we've been down in terms of weeks, macro. This is massive. Put on some colors here so we have something to look at. Time frame, top to bottom. This has been 11 weeks down in the red with lower highs and mostly lower lows. The main thing is the highs have all been lower as well for my type of analysis. So eventually this has to break. Now, I said in the intro, we're looking for also some price targets as well. Now I'm choosing this zone. If I throw it onto some bars again, and on the days, this is a significant price range that Ethereum has just completed. And now we're basically trying to bounce back out of that. So in terms of some price targets, I look for the 50%. And for Ethereum, a bounce could lead us towards around $1,400, somewhere around that point, maybe a little shorter, maybe a little more, gives us about a 26%. So there's something to play with there. If people are more experienced and they're going to use some leverage, then you definitely have something to play with in that regard in terms of Ethereum and the support and resistance levels, how not to get caught in the traps, looking at the timing. And of course, we've already been up for 1, 2, 3 days. So let's see where this correction comes in. And if you look closely, we did just break yesterday's low. So we do have a slight correction at the moment, and then we need to wait for some confirmation in order to get that trade in that same direction, keep the stops in play. ADA, on the other hand, has been grinding its way around these lows and really looking like it wants to break out and test some of the upside. So what we want to look for is if there is higher percentage gains to the upside before we hit some critical resistance. Now we've got short-term resistance here at about 15, 14%. So I'm just looking at these highs. The next highs, which have been hit twice at about 67 cents, that gives us about a 41%, 42% move from where we currently are. So by the time we get some confirmation, the breakout, then there's still more room to run in ADA compared to something like ETH. Now you need something that has high volume as well, so that you don't get too much slippage. In terms of the major level here for resistance, you can see the market sat, and then broke down. That gives us about 60% of a move to the upside. So you can start to see that there is more room to the upside to be trading these than there is to the downside, where you would have to put your stops so that you don't get creamed and crushed in the market if it was to turn around. So these are looking a little better in terms of trades. Of course, there's no guarantees, but at least the risk to the downside is a lot less. And in terms of what's happening in the market, this does seem like what it is building towards. I'm not saying it's going to happen tomorrow, but we're definitely starting to see that across the board with the volume coming in on the macro picture for Bitcoin, for Ethereum as well. Bring it to a week and have a look at the volume. You can see the reasonable volume here compared to the last several months, basically 12 months. This is one of the biggest volume weeks for ETH on the Bitstamp chart. And if we look at a different exchange, Coinbase, extremely high as well. So just over 12 months, this is one of the highest volumes, which means there's a lot of stopping power that is coming into the market, and it is attempting to have a turnaround for that bounce move. But you don't want to get caught in the trap. And the last one I'll look at is Solana, which a lot of people have been trapped in, especially during this period in January, February, March. I remember it very specifically. We're talking about it on the channel, on Twitter, with our members in the Investor Accelerator. If you're interested, the link is in the top of the video description. We go there live once a week, Monday mornings, weekly group calls. Join in, ask your Q&As, and understand how to trade and invest. Now, looking at Solana, this was clearly a fake out, and there was a lot of people talking about buying this dip. For a trade, different story. It's a really, really good trade. And that's what I think we're coming around towards again now. This sort of setup, pump to the upside. You can get in nice and close. You can have your stops nice and close, reduce that risk. And then to the upside, you've got a fair bit of ground to cover before you could get rejected at some critical levels. Now to the downside, to the current market action, you can see we're slightly different. We've dropped a little bit lower, but the lows were all getting lower, and then eventually it turned around and bursted to the upside, turning the trend green. That's what we want to see. So we're coming down, starting to turn around, higher low, and we're looking for that trend to turn green. To the upside, from where we currently are to these critical levels, about 60%. So we got some good upside here. To the underside of this previous level before it broke down, 80 bucks, 100, 120%. So in terms of a trade, we've got to separate these. Trading, short-term, investing, long term. All right. So there is some room to move if this can get a move on with the trend turning up and finding some clearer ground, breaking through some of these resistance levels. So there's a lot of ifs, but the beauty about it is that it's still close enough to the lows to put a stop in to reduce that risk. And of course, today's video is looking at what's coming next in the market, looking at potential traps, not to get caught out in the traps, and how to stay safe in the market if you were looking to trade in the overall macro bear market, because some people are looking for ways to understand how to make some money from these markets. And that's why I would specifically be looking at these markets right now. And of course, there's buy a bit. If you don't want to trade leverage, don't do it. Only do it if you're comfortable, you got a plan. That's the way I'd be looking at it. Check us out, the Crypto Hobos and the trading group over there for the World Series of Trading. And of course, as always, smash the likes, subscribe to the channel if you haven't already. I'll see you guys here at the next video. Until then, have more fun to get more done.